CESC is a company that we want to chat about, not because of their mainstay power business, but this time around because of their FMCG business. Too Yumm is the brand, of course, that CESC owns. It's a venture by Sanjiv Goenka into FMCG, and he does want to bet big time on the consumption business. And that's what we want to talk about with the chairman of the RP-Sanjiv Goenka Group. That's the man himself, Mr. Sanjiv Goenka. Thanks so much for joining in on ET Now. And I wanted first up talk about the consumption business, because you've been betting big time over there. Too Yumm brand has been getting a great response. I know most of the people at my workplace are very excited about that brand. But how are you looking at the business, say in the next 5 to 6 years? What do you aim to achieve with that? I understand you're perhaps eyeing revenues of around 10,000 crores.
I do believe we have hit a sweet spot with guilt-free snacking. There are a number of products that we have lined up for launch. We just launched Karare, which is again a baked product and has met with great response. All the 6 products that we have so far under the Too Yumm category are doing exceedingly well. We are not going to restrict ourselves going forward to just guilt-free snacking. We will get into other categories, and we will launch our next category by April, May of next year, and another one by September, October of the same year. So I think there are going to be multiple products, and as of now we are available. Our products are in 4.5 lakh distribution outlets. We are adding about 25 to 30,000 net distribution outlets on a monthly basis, and we are seeing great traction for our products. So across the country now, and I think so much so that in the Western snacks category, we seem to be now gaining market share, and we are 3.5% of the overall market share in the Western snacks category. And in certain cities like Calcutta, we are up to 8%, which is higher than any of the, which is the highest share in that space.
So does this coupled with a lot more launches in the FMCG space, and what are you looking at brands in terms of brand extensions, because the initial response certainly has been not bad.
So there will be some which will be under the same brand. There could be some products which will be under a different brand, and there are some categories clearly which cannot come under the Too Yumm brand, but there are many categories which can come under the Too Yumm brand. So I think it's going to be a mix, and going forward, we do expect the existing portfolio to break even by the middle of next year, and then there will be other launches for sure. Okay.
We just have some more flashes coming in from the Finance Secretary. But Mr. Goenka, I'm just going to take in one more question, and this is with respect to coming back to CESC. Now, analysts believe that CESC is now a re-rating candidate in the wake of the impending demerger. So talk to us about the potential value unlocking that we can witness from the demerger.
You know, I think over the last many years, we were at a discount to market multiples because we were a conglomerate. I think that position changes now. So all the businesses will go out and you will only have the power business. We are focusing much more on distribution as we go forward. We distribute power in 5 cities: Calcutta, Greater Noida, Bharatpur, Bikaner and Kota. And we are hoping, we have made a bid, an aggressive bid for a distribution franchise in Maharashtra. If we win, that could be our first entry into power distribution in Maharashtra. There will be more in other states as well.
And most in the market are also making a case for strong free cash flow generation at CESC going forward, because even the losses at Chandrapur have more or less ebbed. So do you have any capex plans that you've lined up, or is majority of the capex over?
Well, I think given that majority of the generation capex is committed and finished, there will not be too much of capex on generation as we go ahead. Distribution is a relatively low capex business. We have already invested significantly in the Calcutta franchise and distribution. We have invested close to 5,000 crores over the last 4 to 5 years. And I think we are coming to the end of that investment cycle. So you will now have maintenance investment as opposed to investment for really radical improvement of the infrastructure, which has already happened. So yes, and cash flows are at this point in time very good.
Right. So just wanted to understand, because you are waiting approval from the West Bengal Electricity Regulatory Commission as well for the spinning off the distribution and generation businesses. What are your expectations on that front, and what timelines then are you working with?
Well, I think what we are awaiting from the West Bengal Electricity Regulatory Commission is the approval on the power purchase agreement. The demerger has already been approved by the NCLT. And I think we should get it in the next few weeks, but let's see. I think there is already a power purchase agreement between the Haldia Power Company and CESC. So I presume it will be the same platform and the same model that will be adopted.
Right. I want to talk about Spencer's as well. And what is the update on the stake sale here to Alibaba? Are you in talks for the same? And when can this deal really materialize if it's on the cards?
No, we do not comment on any kind of market speculation. So sorry, I mean, I really can't comment on this.
Okay, fair enough. What about the operations at First Source? If you could give our viewers a quick update on that company in the group.
The First Source operations actually have improved, and last year was a good year. This year is a better year than last year. But going forward, we have to make some changes. We have to make changes in the way we operate. We have to get stronger on AI and robotics. And right now we've engaged McKinsey to help us actually chart our plan for growth over the next 3 years. So over the next 3 to 4 months, they will actually be helping us with this program, and then we will embark upon this.
Okay, Sanjiv, we leave it at that. Thanks so much for taking the time out and speaking with us today. Glad that you could join in and, really candidly chat about just so many issues going on with your company. Good to get in clarity over there.